If you want to introduce yourself with your name, your business, and what you most want to get out of today, that would be wonderful. So, Melinda, I would love to start by meeting you. I will just take you off mute. There we go.
Hello, I'm Linda. We've got a security business, both of them. Been going about 7 years. There's about 13 of us. And yeah, just with founders, we've got bigger and the staff number has come up. Well, Cashflow is getting a bit, not out of control, but yeah, a bit harder to manage. Just more clients and yeah, trying to get the money and budget and things.
Absolutely, that makes sense. You're certainly in the right room today. So, thanks for joining us, Melinda. Sarah.
Hello.
Hi.
Hello, everyone. My name is Sara. I have a small business called Enjoy Italian, teaching through creative methods, including cooking. And yeah, I would like to know more about cash flow because it's a very weak area for me. So,
Fantastic. Yes, it is for so many of us. Absolutely. Vivian.
Hi everyone, I'm Viviana Osorio, and I still don't have a business here, but I used to have one in Colombia manufacturing business. So I'm trying to get as much information as possible because I would love to start a new one here. I would like to transition into consultancy.
Oh, fabulous. That's a fantastic goal. Welcome. Glad you're here with us today, Vivian.
Okay.
Mia, we'd love to meet you.
Hey, hi, my name's Mia. I have a business for about 4.5 years. It's just me. So there's not a lot of cash coming in, definitely none coming to me. I'd like to change that and get some visibility on that. And also because I'm really changing the business model. I just launched something a few weeks ago and I'm in the process of rolling out some changes, and it's going to change probably the income for sure, but the sort of data that I have access to. So I just want to fine tune what I'm doing before it gets more complicated.
That's wise. I love you being so proactive there. That sounds awesome, Mia. We've got a couple of people with no video on, but I'll call out and see if you're there. Tim, do you want to jump on and say hi? No, I don't think we've got Tim there. And I think just the last. Oh, you might be coming on. No, if he comes back on, we can. But Hayley, I can see you've just joined us. So this is she's from the Peel Chamber of Commerce. If you haven't met her already, would you like to say hello?
Hey everyone, I'm Hayley. I do the events at the Peel Chamber of Commerce. And yeah, just really happy to see everyone online today. It's very important about the cash flow for a business. I hope everyone gets to learn some points today and take something away from it. Welcome.
Wonderful. Thanks for having us with you here today, Hayley. It's great to be here.
Thanks.
All right, Colin, take us away.
Sorry, I'm just having a little play on the screen so that everyone I can see with actually affecting what we're doing over here.
Yes.
I'm trying to obviously leading with absolutely all so okay. So what we're going to cover today, we'll zip into it. Obviously, how to forecast your cash flow and avoid unexpected financial setbacks. Common cash flow mistakes and how to avoid them. How to build a consistent, reliable revenue stream, and easy to implement systems. And obviously, at the end of that is outcomes, better decisions, and stronger business. And we're going to go through each individual piece, and hopefully we'll get some good conversation going and help everybody out. So let's start. Most small businesses don't go under because of bad sales. They go under because the cash runs at the wrong time. And I'm sure there's a lot of nods. And great businesses, but for some reason can't make it through. And there was just a matter of mention, so there was a building company that just went into insolvency yesterday. It was pretty much signed up to build the new hospitals. Which would have been $1.2 billion. That doesn't just affect those people you're making doing a $20,000 turnover a month or $5,000 turnover. They just didn't have the cash. So let me sort of ask you a little question here, and then we really don't need to answer historical sort of style thing. Have you ever had a month where your sales are absolutely flying, everything's going really well, but your bank account was dead, it's flat? A lot of small businesses are running their business out of their bank account rather than actually in their accounting system, things that are other wild. So really it comes down to, welcome to the world of cash flow. Cash flow is not profit. One of the classic words we use around here regularly is profit is food, cash is air. Without cash, you've got nothing. You can be profitable on paper, and still be broken real life because the money just didn't land in your account when you needed it. And as a small business only for years before, I found that many times. If you're not learning to run your cash flow correctly, and I know that's why you're here, that's what we're here to talk about. So who can make a profit or pay still run out of money? Cash goes, it's about timing. This is what, like, how does that?
It's 100% about timing. It's about bringing your income in quicker and potentially paying your expenses out during the month for as long as you can, especially when you're in a cash crunch. Talk to your suppliers, talk about extending your terms if you need to. Have those conversations. On the income side, be talking to your customers, make them fully aware of what your terms are. Make sure they're paying you on time. If they're not paying you on time, do something about it.
Yes, and that's what you're great at.
Yeah.
Just like tells the truth. So if the clearest signal of a health check, and so I'm pretty sure you've all probably done a business health check at some point and had someone run one through with you and you've got a business plan or those sort of things. But a lot of people don't spend their time looking at the cash flow that's sitting in front of them that actually gives them a gauge of where the health of the business is. Something to work on. Quick decisions ugly. If you don't know your numbers, how do you make a decision? One of the most important things you have to do is sleep at night and get good rest so you're recharged for the morning. If you owe money or people owe you money, or you're not in control of your numbers, it's very difficult to sleep at night. That's not what this particular line's about, but that's actually personal experience in different businesses. But at the same time, we've had a few challenges with some government things a fair few months ago, wondering where our next dollar is going to come from and working through it. And people weren't paying us as well. So we clearly understand it.
We've lived it.
We've lived it.
We've stopped sleeping because of it. Yes.
But one of the ways we got through all that was Gail, her expertise in cash flow and making sure that, and we'll go through this a little bit more in depth, but when you're doing a forecast or you're trying to follow where sales are coming through, they're real numbers. They're not a budget. I'm going to get that sale. But it's not a sale until you've got it signed. Until that person signed it or you've got that transaction actually happening. And so being mindful of what a budget and a forecast is in the difference to a cash flow. We'll go through that as well. Oh, sorry, I thought you were getting ready. Getting the expense. By the way, it was a little bit, I just go off to a minute. As I said, this is Gail's very first presentation and absolute panicking. So when I stop for a breath, I can hear a deep breath going on my side. You're going, you can ask me to talk. Don't do that. Anyway, let's move on. Let's run a quick scenario now. This happens a lot. Okay. You've made $20,000 in sales this month. There's an example. Now, whether you're a big business, it might be $200, might be $200. But let's run on to $20,000. But there's only $3,000 left in the account. Now, put your hands up if you've seen something like this happen to everybody or yourselves. Okay. Yeah. Okay. So where did the money go? So we've sold 20,000, but we've only got 3,000. Why is that? It's hard to figure out why this is happening. So let's run through it. So it'll be, that money will be tied up in outstanding invoices, an example, but people owe you money. Now, there's a lot of organisations that have 7, 14 and 30-day trading, but as the bigger the company you sell stuff to or you do a service for, the longer they take the pay. So they're using you as a bank, and I'm sure we'll talk about that in future times as well, but that happens. And money owed to you, you've got to get that money. Unsold inventory, and if you are a buy and sell business, both retailer and stocking, obviously, and not obviously, sorry about that word, people will buy 10 or 15 to get a better price, as an example, but they're only selling 5, so now their stock has gone up. So they're paid obviously the supplier, but you're sitting with the stock, so you don't have the cash. Drawings. Now, this is an interesting one. So if you're not a proprietary limited and you're a sole trader, you will have drawings, right? Not wages. So they don't show in your P&L, and we'll show this in a second. So you're not seeing them. So that can also be a trick. We're drawing that out of the bank. There's no transparency there. Credit card. Do you want to help me answer?
Yeah, so obviously as you're incurring expenses and you're using your license credit card to pay for things, and the expenses that you're actually paying for are coming through into your P&L as you are spending. But your credit card payment isn't due till the following month. So just be wary of how much you're putting on your credit card and just make sure that when the time comes, you can meet that expense. It's easy to get carried away.
Yeah. Of course, here's the kicker. ATO. We love the ATO, don't we? Invest statements. And of course, with BAS, that changes every month. It's not a standard. It's so like this month you'll sell 20,000, next month's 10, next month 30. But then that's not automatically that you go, make 2,000, 10,000, and 3,000. You've got your credits that come into account. And then, of course, you're then paying the next 30 days. And so if you have two $10,000 months in a row and you've had 20 before, and you use that money, finding that money is very difficult. And a lot of people use money where they shouldn't be. Did we cover back here?
Yeah, I was just going to say, hopefully we'll cover that. But one of the key things that I would recommend that you all do is don't just run one bank account. I would suggest you have different bank accounts. Have a bank account that is just for your tax. Put your money in there, put it to one side. Don't get to the point where you need to make a tax payment and you haven't got the money allowed for it. There's no limit on the amount of bank accounts that you can have.
Good. Okay. We go too fast, we okay? There's a fair bit to get through, so I'm trying to make sure we get it. Okay, so we're going to now show between a profit and loss statement. That screen's up in the way. Yeah, you can see it? Yeah. Oh, okay. Yeah. The profit and loss statement and also, P&L, profit and loss statement, and also your cash flow. So I'll go back and just so I can run a scenario for everybody so you can see what we're doing. So in this particular organisation, our organisation today, April, we have sold $20,000 worth of goods, services, and we've also received another $5,000 in other revenue. And this
Accounted for another.
Accounted for, which is a grant that someone's promised us, as an example for this business. The cost of sales on this one has been $3,000. So we have a gross profit of $22,000. So I'll scroll down. Here you go. Scroll down a bit. So we have expenses. As you can see, bank fees, freight, courier, insurances, vehicle, all the usual ones. Payroll.
If you have
Payroll.
Yep.
In this particular case, this one did. And so we actually have a profit here of $12,950. Reasonably easy to understand. You've got your revenue, cost of sales and expenses, and then we've got a profit. It's awesome. So you'd be expecting that you've got $12,950 in the bank. Yeah. Let's do it Cashflow, shall we? So if you can look at the top, you'll see we have a starting balance of $1,000 that we've started with in May. Now, you'll see there's $15,000 sitting there where we actually sold, we thought 20,000 plus 5. So we thought we had $25,000 coming in, but we only received $15,000 in this particular month. We had advertising, bank fees, facilities, inventory, all those. You can see all those down there. And now you'll also note that we've highlighted owner's drawings. They sit in your cash flow. They don't sit in your P&L. So you don't see them there. So you're thinking you've got money. The other one you don't see is tax, because that's after the fact. So this little business here, their cash flow went out of $15,750. Now, so we have a net cash flow of minus $750. Now that doesn't mean we haven't made a profit. We have $13,000 profit, but we don't have the cash. So you'll see the closing balance of $250 because we started with $1,000. And is this making sense? A few nods would be handy, or if there's no any nods, I'll go back over. Okay. So let's go to the next month. Our accounts person's been on the phone and pushed really hard. We've got some money in. Do you want to jump in here?
Yeah. So basically what we're seeing is that the $10,000 short that we were in our first month that we were expecting in, a lot of the time, it is just going to be a case of it's just a timing. And hopefully what you'll see is in the following months, that extra income that you're expecting will come in. Obviously, worst case scenario, you've got bad debt. If you've got a bad debt, you're not going to get paid. And we'll come on to this a bit later because part of managing your cash flow as well is also managing who you do business with. Don't underestimate the value of locking into your customers' creditworthiness. It's an absolute must. You have to rely on people paying you. So you need to know that when the time comes, those people can pay their bills. It's as simple as that. So creditworthiness is huge. You want that money coming in. We were lucky in this scenario because it was just a timing issue. However, that timing issue has put a cash strain on your business because you didn't get that extra $10,000 that you were hoping for. So then you start looking at your expenses. And as Colin's rightly said, there's a couple of expenses there or items there, cash out, and are sitting in your cash flow statement that you just don't see on your P&L. They don't hit your P&L. Tab. For example, if it's, I put it in here as income, but if it's bad, so your GST, you're incurring your GST at the point on your P&L, at the point that you're making the sales. But that GST doesn't appear on your P&L, it appears in your balance sheet. But at some point, you need to pay that over to the tax man. And again, we'll come back to this because I would always recommend to anyone that's in business, have multiple bank accounts. I can't stress it enough. If you are in a position and you're lucky enough to have cash reserves one month, put some of it aside. Take the stress out of your life, put it into a separate bank account. And so when the time comes that you're having to pay the ATO or you've got a crisis expense that you didn't know about, you can sleep at night because you know you've got the funds sitting there. But don't leave it in your transactional account. Put it somewhere else, put it in another account, and try not to touch it unless you absolutely have to.
Good. So one of the activities we're going to ask you to do and get these spreadsheets sent to you is actually try to work it out 3 months in advance if you can. So look at what income you're going to have coming in the next 3 months. Look at your expenses, add them up, obviously, and then fill them out. So you can actually look and you know where your balance is going to be. So there's no nasty surprises. Get in front of the game here. Okay.
So just pulling together a cash flow forecast as well, you might be sitting there saying, where do I even start? So the easiest place to start is your history. Look at what's happened in the past. It's always your starting point. Look back over the last 3 months, over the last 12 months. I would recommend 12 months, especially if you're in seasonal business. Go back 12 months. Look at what your last 12 months looked like. See where the dips were, see where the highs were. Some expenses you're only going to recur once a year. So again, if you go back 12 months, you'll capture them. You'll capture them in your forecasts. Put down, what I do is I put down as much as I know about personally in my forecast. The next step is go and start talking to people. Talk to your sales people.
Awesome.
Talk to your admin people. Talk to your CEO. Get some ideas of your salesperson. How's your salesperson feeling? What do they think is achievable? And I use the word achievable because don't want to do in your cash flow is inflate it. I always go on the premise that you underestimate your income and you overestimate your expenses. You get a worst case scenario on your cash flow. As realistic as possible, but err on the side of caution. And if you can still have cash in the bank in the worst case scenario, you're in a really good position. So have conversations within the business. Speak to the people who are making the sales. Speak to the people that are spending the money. Tell them to stop spending. I've done it before. Start spending money. So it's conversations.
Good. Thank you. So list income you expect over the next 3 months.
Yeah.
List regular known expense coming in.
Yeah. So again, from the income expect,
like you're talking to your salesperson, and your salesperson, you're set them a target. Well, that salesperson might be you. You set yourself a target. I'm going to sell $25,000 this month. That's your target. Don't put that target in your cash flow.
Until you
That's your target. Until you know that sale is pretty much going to go through. What we do here is we say, this is what we'd like to be doing. This is our target. This is where we want to be. However, realistically, we're all going to have a target for your salespeople, but also have a forecast for your cash flow. They are two different things. From expenses, know what's coming in, then what's going out, have the conversations. If you need to stop spending money or telling people to stop spending money, take the credit cards off them if you have to. Tell them to stop spending the money. Again, speaking from experience, what I have is I have a 12-month cash flow forecast. But what I do is at the end of every month, is I then compare that forecast to my actuals. I go into my bank and I say, what do I physically have in the bank? How does that compare to what I was expecting to have in the bank? And literally go through line by line. Where did it fall over? Where did the money not come in that I was expecting to come in? Where did I spend more than I was expecting to? You need to do that on a regular basis, because that will highlight to you where the problems are. And it's only when you know where the problems are that you can start to fix them. So get into the habit of reviewing it on a regular basis. I do it monthly. You might want to do it weekly. I wouldn't extend it past the month. You can't afford to extend it past the month. You might want to do it weekly or fortnightly. I'd say monthly is the absolute max you should leave it for your share.
But basically two things, ins and outs and the gap.
Yeah.
Yeah. Okay. A, B, and C, they're just different plans, right? So just make sure if the top and the bottom will be you're not, where's the money? Make sure you've got a plan B and a plan C. That's up to your organisation.
I think what we're saying there is have a plan.
Yeah.
Have a plan for when the cash dips, and the plan's going to be unique to each of you. But you have to have that plan in place, especially, like I said, if you're a seasonal business or some others, and probably a lot of you over that Christmas, New Year break, you know that your sales are going to be way down, but you've still got to pay your rent. You've still got to pay your payroll. You've still got all of those expenses. So plan for it. And that plan might just be having that set bank account and having your cash reserves. Could be as simple as that. It could be a strategy that you have within your business, pull income in from somewhere else to help you get through that period. Whatever that plan is, make sure you've got it in place.
So we're not going to make you do the activity now. It won't be that unfair to you, but we will give you the blank sheets that you can do later, and then follow, and then we can always follow up with you if you need anything. I call just to doing bits and pieces to fill it out. Okay, so there aren't bad businesses, are there? They're just bad habits, and a lot of them sound bad habits. So relying on credit cards instead of planning ahead, that's a classic. Paying others before yourself, another one. Ignoring your break-even point, understanding your break-even point, and then ignoring it. Really bad. We've seen a lot of that. And over-committing, obviously, when the cash isn't available, either buying stock or expanding exactly without the cash. So, yeah, I won't go through the making everyone talk. Well, let's say what to, of course. Okay, so let's just recap just quickly on this one. So the biggest mistakes as we talk about is obviously not tracking cash flow regularly. That's a real big one, and I know that's why a lot of people are here to learn how to. Failing to forecast, not managing accounts receivable, that is one of the biggest. Yeah. Can I ask, how many people have accounts, run accounts with, I can't see everybody, unfortunately, running accounts with other companies that people owe you money? Is that a thing for most people on the online? You're all you cash organisations.
For me, I'm almost entirely instant cash. There's very few opportunities. This new part of my business will be working with some local councils. And I don't have a lot of confidence, but normally they have their own policy and little people like me abide by it, it seems. Yeah. But the few times I've had a council owe me money, they usually have some 30-day next month.
You should expect 45 days.
Yeah. So
Mhm.
what are the parameters around having to agree to their big dog policy? Because I put it on my invoice what I'd prefer, and then they pay when they want. It seems on time, but by their guidelines, not mine.
You can go in with a policy of 7 days. If you get the right accounts person, I'm able to put it into their system on 7 days. Honestly, the best way to get that is to find a relationship with the accounts person or with the person you're dealing with and make sure that gets flowed all the way through. We're pretty, right to local councils, and we do with a lot of them, they're pretty quick once they get their invoice.
But we're the same. We can put 7 days on our invoice, but they'll pay us when they pay us. We are at the mercy of their payment terms. Now, there's a couple of ways you can get around that. Maybe not necessarily for the councils. Introduce a late payment fee and charge it. Don't just say you're going to charge it. If it's on your invoice to say late payments will incur a fee of 2.5%, charge them 2.5%, it will make them sit up and see. And hopefully it will help them do it so that you can manage the relationship well, because obviously you don't want to lose a relationship. Well, they have to understand you're a small business and cash for you is king. Cash is your sanity. One of the things we use here is profit is vanity. Cash is sanity. Cash is what is going to get you through the day. So you just need to have those conversations, but introduce a late payment fee policy. Make sure you spread your risk. So you're like you're lucky by yourself because you've got a lot of cash business happening. But for the other people that might all operate on credit terms, like offering credit to your debtors, spread that risk across. Spread it as far as you can. Don't rely on one big customer that tells you what the payment terms are.
Yeah.
Have relationships with different customers. Have the ability to dictate what your terms are and spread that risk across as much as you can.
No. Okay, not managing accounts, we just talked about that. Overestimating revenue, that is absolutely the biggest cost.
Yeah, don't do that.
Sorry, Colin. Can I just interrupt? We've got one more question from Melinda, if that's okay.
Yeah, on the credit terms type thing, because we don't supply goods, we supply services, which are our guards, we are only credit terms for all of our suppliers. So we struggle with, as you said, the bigger the councils, government departments, hospitals, don't even claim to see all those big ones. Yeah. I might put 14 days on there, something, but they definitely going to stick to their terms. And what we find hard is we might know that every month, for instance, there's $30,000 going out for all of our regular clients, but we're not guaranteed to get that in however many days. So that's where I struggle with. I'm thinking, doing the forecast, how you can pick what that you might know you send $30,000 out of the month. 1 month, it couldn't be good and I'll get closer to 25, but then the next month, as you get closer to the holidays, things like Christmas, some of the departments shut down. They could take 60 days to pay.
Yeah. So I think we all do struggle in different ways with those things, and the ways, yes, no one's perfect in this space, but the way that we've got around in some different organisations, the relationship with the person that's purchasing from you, to have that conversation with them, and then of course trying to have a relationship with the person that actually does the bit on the computer. You've got to stand strong as a small business, especially if we deal with government as well. I have this 15-day policy they're meant to adhere to. I'd remind them of that in a very polite way to the right people that there is a 15-day policy of them looking after small business. If you charge a 2.5%, only times that by 12, that's quite a big interest rate that any finance person would look at that and go, oh no, I'm going to do it. The other way an organisation was involved many years, we used to give a 2.5% rebate for paying within 30 days. Now, a very smart finance person will look at that and go, my God, that is, if we get that 2.5% and times that by 12, that's a massive big discount. So that was another way of getting your cash flow quicker. But personally, the relationship with the person that places the order with you, the relationship is some form with the account person. It's people to people dealing. If you can have people to people dealing, kills all this rubbish that you see on emails going back and forward, you hate all that sort of stuff. Get the relationship. That would be my personal advice.
Yeah, and I don't obviously know the ins and outs of your business specifically, Melinda, but I know from our perspective, we're delivering services as well. And we found ourselves in a position where we were basically not being paid until the service had been delivered and everything had been signed off.
Could be 3 months.
We changed that and we said, actually, we want 50% at the beginning, and then you can pay the remaining 50% at the end. So we just went back to them and said, we're not willing to accept 100% at the end of the process. We want 50% now, and we want 50% at the end. And that would make a big difference to your cash flow. So, as Colin said, have those conversations, set a policy, 50% at the beginning, or it could be 30% at the beginning, 30% halfway through, because I don't know how long the projects are or your services are delivered, because ours can be delivered over a period of 3 months. So they're saying you spend 3 months delivering something, and at the end of the 3 months, we'll pay you, and then we'll take another 45 days to pay you.
Yeah. And just like you, we've got 3 months of wages in there, 3 months of contractors that we're using as well. So we fully get that.
Yeah. So set it up. I want 50% at the beginning or 30% at the beginning. I want 30% halfway through, and I'll take the remaining 40% at the end. Yeah.
Okay.
We can help you more like
Yeah.
one-on-one on
If need be.
need be.
For sure.
Yeah.
How the rest of it done that well. Not managing expenses, of course. It's critical. If you can get a cash reserve, please get one. The old war chest, as people talk about. And then, of course, letting customers use you as their bank. And they do. They do. But if you're not squeaky wheel, they're going to use you as a bank.
Yeah.
You have the right. You've sold them something. You're giving them a service. You've done something. You have the right to be paid and make a profit. It's unfair that an organisation takes advantage.
And just on with Colin saying squeaky wheel, the one that shouts the loudest gets paid first. Be the thorn in their side. Be the one that's constantly phoning them and asking for the money.
And breaking the song.
But seriously, the more you hassle them, the more you shout, the more you become a thorn to them, you'll be amazing how quickly they'll start paying you.
Cool. Can you do a few more mistakes, surely?
Yeah.
Dennis. People you owe.
Now, people know you.
Who are you? See, you're an accounts receivable, not an illegal. That's not working on the screen. Sorry. Oh, okay. Okay, change it.
Oh,
Can you read the next one?
Oh, why don't you read it? Sorry.
Okay, ignoring
Accounts receivable. 101. Don't ignore your accounts receivable. That is your money. That is your income. You have delivered a product. You have delivered a service. That is your money. Do not ignore it. Do not just sit there and go, oh, I'll give them another week. They'll probably pay it next week. I'll give them another week. No, don't. Fine. Your payment terms are there for a reason. Make sure they're adhered to. Be the squeaky wheel. Be the thorn. Get that money in as quickly as you can. And that follows into the second one.
They're using, obviously, having a system to monitor and track. Hopefully using Mile or Xero, QuickBooks, whatever other ones are out there. There's a few others out there as well.
And you'll probably find that it's the same, maybe 2 or 3 people each month that are pushing you. Whack them. Maybe for those people, maybe you just give them a little bit of a price increase. Maybe you give them maybe at that point, you start charging them the late fee. Or maybe you go the other way and say, I'll give you a discount if you pay me on time. But don't just accept it. Don't just assume, oh, they'll pay next week or next month it'll be better. Be proactive. Put something in place. Because unless you push them, they'll keep pushing their terms out as long as they can.
That's just easy.
Yeah. Know your expenses. Know every single dollar that goes out of your business. Know where it's going. Know who's spending the money. If you're in a business where you've got numbers of employees and 3 or 4 of them have got credit cards, make them accountable for what they're spending. Know where every dollar is going. You can't run your business if you don't know where your dollars are being spent. So keep track of everything.
What you're talking about before is practicing. You're not going to get it right this time.
No.
You're doing this.
Absolutely not.
Right.
You are not going to get it right. It will take you a while before you get to a point where you're close to monitoring your cash flow. You'll never get it perfectly right because there'll always be things that crop up. There will always be someone that's always paid you well, always paid you on time. And so you go, oh, they always pay, that would be fine. And then 1 month comes and they don't pay you. So you'll never get it right.
So we covered off the panic tags and that month's compensation and monitoring weekly, etc. Tracking expenses and forecasting.
Yeah, so that's what we were talking about earlier. Every week, every fortnight, at the absolute most every month, track your actuals against your forecasts. Find out where the problems are. Line by line, find out where the problems are.
This is the most fun one of all. Cash reserves. How many are the big, awesome ones?
Big
Cash. While we're going to cash reserves, I'm just going to jump on the payers. Coming up is your super funds if you have staff. Then, even for yourself, okay, make sure you look after yourself as super. You're going to do your drawings. Make sure you're doing your own super as well. A lot of people in business, they don't have a lot of cash, and so they just get enough to run by, but they don't look at the future or they hope the business is going to change in time. When you're doing your pricing, you're doing your quoting, etc., include that you should earn some money and you should get some super out of this because you're going to look after your future as well. You're not always going to be able to sell your business. That doesn't always happen that way. And a lot of people do think that, oh, I'll make it when I sell the business. Things change. Try your hardest to use an hourly calculator, work out what your value is worth and what the industry is you can get through. Make sure you've got your own super in there. If you do have employees, remember that from the 1st of July next year that you'll be paying your super when you've got wages, not on the quarterly. What we do here to keep our cash flow even, we've gone from quarterly down to monthly or fortnightly pay on our super. So when we pay our staff, we actually pay our super now at the same time. And that keeps us balanced through the year rather than the big peaks and troughs and you're looking for money every quarter. So we do that on that fortnight. Gail talked about having a separate bank account. If anyone's read Barefoot Investor, he'll talk about having the fund money, these 3 bank account ideas. I think it's a great way to do it. You could have your BAS money up there, you've got your superannuation money, or you have your fund money, or your reserve. So 4 or 5 bank accounts. Not a bad thing to have. So what we've written here is obviously you've got your BAS, your DST and your wages. Payroll tax if you've got staff and you're spending over $1 million on staff. Payroll tax, your income tax, and of course maybe a bank account. You can monitor and look at, and it's probably always keeping them separate from your home life. We have a lot of businesses that integrate them together. Have a separate one. Have your home and have your work. And really know where you're working at. Don't let them.
But even within your business, have a transactional account that your invoice payments come into, that your business expenses go out of. Purely transactional. And then have a tax account where you put your tax money away. Have a superannuation account where you can put your superannuation rate to one side. Just have them, can't stress enough, have separate bank accounts.
Think cover that.
Yeah.
Then we've given them that canister and bank account. Okay. Let's get some consistent revenue. Now, cash, and we have this fight regularly. Cash is king, as Gail will always say. If we haven't got a sale, we haven't got cash. And so you've got to keep the revenue stream coming in. So what are ways to balance out through the year so you can get this consistent flow of coming through? So obviously in another workshop, well, you can work with different people and work on your marketing and your sales so you can get some programs working so you have a consistent flow coming in. So whether it's VIP access to things or care plans or bundling things up and selling them as a unit, lots of different ways. So we don't need to go through too much of that tonight. It's a bit of a separate thing, but more about milestone payments.
That's briefly what we spoke about before. 30% up front, 30% halfway through, 40% at the end. Don't leave that, especially if you're providing a service that's going to take longer than a month, I would say. Break it into a milestone payment. Don't expose yourself.
Understanding really clearly your top 20% businesses. I'm going to go through an 80-20 thing shortly. Monetize, special offers, quick online deals, and reconnect with old leads. One of the best ways to do business is to go, especially if you've been in business for 2 or 3 years, going through your old customer list, look at who's not buying from you. There'll be reasons they just drop off. There's no bad blood. They might have just dropped off. Reignite with those guys, get them going. It's easy to get an old sale re-going than just to go get a new sale. It's an old classic. So look through your old customer base. Test new ways. Let's read another bit. This is an exercise I would suggest you have a crack at later, is pick one income stream that you can stabilize and repeat. Have a look at your organization, look at your business, and pick that one income stream, stabilize it, hold it, and just keep repeating it and trying it out. Again, it's a bit of marketing set in that, and you might need to go through a process to do that, business canvas or marketing canvas to do that. But let's suggest to try that. I want to try the 80-20, if that's okay.
Yeah.
Okay. So I'm sure everyone's heard of the Pareto principle, which is the 80% of your outcomes come from 20% of your inputs, or the old story that 80% of your income comes from 20% of your clients. So we're sharing your revenue. Okay, so 80% of your income comes from 20% of your clients' products revenue. I'm sure you've all seen that before. So get in and have a look. What clients and what products is driving your cash flow? Get a really good understanding of that. And if you can understand, that can give you something to work on and market and grow from. It's a bit like grabbing, if you were doing a SWOT analysis of your business, what are your strengths and how do you market your strengths? How do you work with your strengths and how do you make them better? So there's your activity. We'll again send these through, but this is just something for you to have a look at yourself. Look at your top 5 clients and products. If you're using Mile Zero, you should be able to grab that information out reasonably quickly and look at what income and percentage of income that they bring in.
And look at how well they pay.
Yeah. Okay. Have a look at your expenses, of course, and look at 80% of your outgoings might come from 20% of your expense categories. I think it's absolutely true in our organisation. And one of the other things we did too a while ago when we went through a real cash flow audit, if you want to call it, we had a look at our subscriptions. And we used to have about 100 of our staff here. It was in absolute thousands, our subscriptions, whether it be for all different project management tools or just all sorts of different subscriptions. It was quite nice. A bit like all the ones we have at home, Netflix and all that kind of stuff.
Yeah.
Yeah. So have a look at those, and obviously have a look at the 3 biggest expenses. What are they delivering for you? Can you change it? We just changed just recently. Trinity was working on. We had a subscription for MailerLite, Jotform, an ERP, a CRM, all these different ones that are all adding up to thousands. And we found a new ERP system which actually captured a lot in there together. And we're saying $2,500, $3,000 a month, purely from doing a little bit of work and finding it when I was products. Okay. And then the other thing, of course, is time and effort. And if you like, probably some of us who progress do these other jobs rather than actually looking at where the best time is spent. So just let's start the standard old 80-20. Okay, so there we go. How do we improve your income or your cash flow? Or your income. Rule what brings in the bulk of your money. Cut out the let's reduce the effort or services that pay off, and we all do get caught up into that area. So have a look at it, be hard on yourself. Nurture the 20%. So look at that 80-20 concept and look at ways of upselling or cross-selling for those guys, find different products, services, how you can grow that and bring that up by 5 or 10 or 15% in your revenues. Control your cost. And this is what we did. We did about probably 5 sweeps over a period of 5 or 6 months, targeting our top 5 expenses and trimming the fat. And we just did a little bit at a time, and it has made net profit wise probably 15-18% difference to our organisation. And that's just little ones, just going back over, looking at whether it's into the point where we got to the water that's coming in the big bottles.
Yeah.
Of the three different incubators that we're running, how much we're spending on it. So we just kept going through and trimming our expenses.
Yep.
Okay. And there's the classic. If 80% of your accounts come to 20% of your clients, why are you chasing your all 80%? And that happens regularly. So if you've got, again, if you're looking at your, let's say your list of clients, and you've got 100 clients, you can pretty much guarantee that 80 of those are giving you a trail of $1,000 or $50 or whatever, the rest is sitting up in the top of it. So look at those. Do you cull them is a question to look at. Do you try to nurture them, bring them back and get them up into the dot line, or spend to your 20% and get them to grow another 10 or 20%? So that's all marketing strategy, but it all comes into the revenue stream.
You don't need to be an accountant, you're right.
You don't need to be an accountant, you just need to be consistent. I just read that out to you. Okay, so I would suggest really clearly making sure you're using tool apps. Xero, Mile, QuickBooks, Rounded's another one. There's a few others. Look, Xero and Mile, they're about $50 to $60 a month.
Yeah, they're
And
pretty
for the smaller businesses,
Yeah.
I think you can get a small one to 30 just doing invoices. Square would be another one. You can use Square.
Yeah, especially for, Maya's nodding. Yeah, there's people that are running primarily on cash. Yeah, absolutely. But there's also within Xero, for example, we sign up to a payment portal, Peak Payments, and that's on our invoice. So put your payment portal on your invoice. Click here to pay your invoice. Put it on there. You'll be surprised how much quickly you'll get paid by having that button on your invoice. If you've just got an invoice that just got, this is my bank account, these are my terms, but then you've got an invoice that says, click here to pay, you'll be surprised at how many people go, oh, I'll click it now, just pay it now and get it out of the way. Because it's so much easier than then having to log into the bank, set up a new payee, set up new account details, do the transaction. Just get them to hit the button. Pay now. Put it on your invoices. Pay now.
Beautiful. Money in, money out, weekly habit.
Yeah.
Digital receipts, invoice automation.
Oh, mine's going to have it.
Oh, yes.
I have that option with those bigger invoices that I'm starting to get with the council. They're like substantially bigger than my tiny daily cash rates. And there is an option for the Square invoice to pay now, but that means that Square gets a commission. So, and it's also to say that it will go through Square. So I use their description box to put my what's it called? Your bank account details, BSB.
Yep.
Hope that they'll set it up that way instead.
Yeah, when I first got here, the payment portal that we were using, and we were paying quite big commission fees on Stripe, but the money was coming through quicker. So you've got to balance that out. What it's going to cost you, because how much is it costing you in fees versus the benefit of getting that cash through the door quicker. But I looked at Stripe, and again, I didn't take anything for granted. I didn't take anything as set in stone. So part of my process was to go out and say, what other payment portals are out there and what are their commission structures like? Can I get something where I can still use a pay now button, but I'm not paying as much money? And we settled on one called Peak Payments. They still take a percentage and not as much as we were paying through Stripe, but it's a really good portal. The customers themselves can sign into the portal at any point in time. They can see all of their invoices. They can see what they paid, when they paid it. They can see what they still need to pay. And they just hit the button and pay it. They can set up direct debits, automatic payments using the portal. And yes, there is a small fee. But for us, that getting that cash in quicker outweighs the small fee that we're paying.
Yeah, with my instantaneous purchases at the markets, people always want to give me cash. Farmers markets way of thinking is protect the small business, give them cash. But honestly, the risk of loss, theft, having to find an ATM because there isn't any anywhere near where I live these days, they're all closing them down. Actually, I just rather pay the percentage and have it land in my bank account. But for these bigger amounts in the thousands, which is very unusual for me, if they're only going to do it infrequently and they're going to make me wait 30 days on their payment policy anyway, then I would rather not involve Square and just have the whole amount.
Yeah, that's fine.
Well, if you can afford it.
And it doesn't have to be an across the board. Like you say, For your smaller amounts, put the pay now, use the portal. For the bigger amounts, just put your payment details on there. Avoid that fee. But if you're going to use a portal, do your research. Find the one that's got the lowest fees. The other thing I liked about pinch payments versus Stripe, with Stripe, it took 2 days for the money to come to a bank account. With Pinch, it arrives in my bank account the next day. So they pay a lot faster. So look at all of that. Look at all the different portals. See how quickly they pay you. See how much the charges are. And like I say, don't make it a blanket. Don't say it has to be. If I put this in, it's for everyone. You can put it in for some of your customers and not for others. Thanks.
Elizabeth, quickly, when are you money out? Make sure you get your receipts for everything you buy, take photos of them, get them into your system. Because we're finding all receipts are starting to pay very quickly. We get them into your system. Set up your categories, obviously profit tax expenses. Unless they could per amount. The activity was set up a calendar, and that was actually to make sure that you were doing your weekly or fortnightly money in, money out. Get it into your calendar, 15 minutes, 20 minutes, track and make sure you're controlling. And then, of course, comes the obvious question comes, when do you outsource your bookkeeping? When is it too much that the amount of time you're spending doing bookkeeping to the amount of time that you can actually bring in revenue and run your business?
Not even just bookkeeping.
Where is
It's
that line?
admin.
Admin, where is that line? I'm zipping through quickly now.
Absolutely. We've just got about 4 minutes left. Colin,
So
put you under
track
pressure.
your income, track your expenses, stick to your budget, make adjustments, set financial goals, and categorize your expenses. That's it. Just remind us as we finish off. Wrapping up, the 3 things, 3 items to track every month, and you need to know these in every business. Money in, money out, then your bank balance. That's your cash. On your P&L, obviously your sales, or your cost of goods, services, and your expenses. They're your numbers. They're what you need to know. Sitting on underneath that will be your profit. Profit only makes any difference if you've got the kitchen. As we go right back to the beginning. Okay, well, 30-day challenge. Fix one thing and systemize it. Make it easy for yourself. Delegate. Now, this is what you were talking about before, right?
Yeah.
So, what do you delegate? What do you automate? And what do you own as a small business? We suggest delegate bookkeeping. What do you do automatically? Your payments, your cleaning, your rent expenses, get all those automatically into your system. But the one thing you don't give away is your cash. Own your cash. You know your cash. You know where you are.
Yeah.
Now, you'll also get sent is your cheat sheet, which is you can see on the screen now. Just little reminders of what to do, 3-month rolling forecasts, expected income, etc. Column mistakes, so you can look at those. Consistent revenues we just talked about.
So this is just an overview of what we've spoken about today. Yeah.
And then what will you fix first? What will you set up? Who's going to advise you? And don't.
That's it for today.
I read through that last bit there, but I just knew we were getting John if we go over. So this one was, so we have a few minutes, or a minute we don't. But is there questions? Journey, you running this? Where are you?
Absolutely. So I'll pop in the chat a couple of links. So if you want to follow up with Gail or Colin, I've put our LinkedIn profiles there so you can connect and get some more information from us following today if you've got more questions. I've also got a link at the top there if you would like to book any further business coaching. We do offer a session for free. So if you want to click on that, you can make an inquiry there and we can meet with you to talk about this in further detail. But other than that, would love to open the floor up if you've got any questions for Colin and Gail just as we're wrapping up today.
No, but I will say thank you very much. I got a lot from that. And I think I heard you at the beginning saying that you will send out the slides.
Yes.
Oh, because I've made some notes in that I can add to the slides. So thank you.
Pleasure.
Pleasure.
You got through, Gail.
I did.
Thanks, Gail.
Well done. And
Nice
thank
to
you
do
so much for sharing today, Colin and Gail. Very much appreciated. And yes, keep an eye on your inbox. I'll get Hayley to send this out for us. So we'll do the slides, the cheat sheet that Colin mentioned, and a couple of useful links.
Cashflow is really one of the more boring subjects to actually talk about. However,
It's probably the most
It's
important.
probably the most important. Yeah. Now, hopefully there's something you picked up out. And as I said, we're trying to find the right level of business to where we're setting it at, but hopefully you pick something up and the cheat sheets will help you as well. So thanks for joining us.
Thanks, Nance.
Thank you.
Thank you very much.
Thank you. Bye now. Bye.
Chat. Let's go.